I believe many of you have been very frustrated with the recent financial situation and also hesitate about the further investment plan, especially during this MCO 2.0 period. So today we have our distinguished speaker, Mr. Lai, with us to share with our local investors what to expect this year in 2021 before we build out our investment portfolio.
Whether should I be pessimistic about the economy or be optimistic about the economic performance this year? To answer my questions, the first thing I look around is basically the most common indicators, the GDP. What we saw here is a strong rebound, and we do expect a recovery in this year and even next. China is expected to be one of the first to move out of the woods, due to the vaccine out from COVID-19 and how they react to this in combating the pandemic. Basically, they are very efficient and very disciplined. Free policy and fiscal policies have been actively implemented in most of the major economies, which basically help to push at the bounce back of the capital market globally. What we can expect this year, of course, vaccine. I believe that with the existence of the vaccine, it will definitely help the recovery of the economy. There's a lot of support from the government in order to be the engine of growth. This year, we will also expect a more stable global environment, especially those who subscribe to the funds that related to China A shares. They have been earning quite a handsome return. The share prices look at it. So is it sustainable or not? If it is supported by healthy fundamental, the correction is basically kind of a healthy sign. The China's 5-year plan of strategic policy, the China government is basically moving aggressively in terms of promoting the renminbi as an international settlement currency, and then they are opening up of domestic market. So all these are the moves basically to improve the economy, and they are focusing into dual circulation. The next one is focusing on technological self-sufficiency. The speed of the technology growth, whether it's a technical or the investment into this sector has been growing rapidly. And the next one is liberalization of financial market. Both value added of the industrial enterprise and the service production rebounded strongly since October 2020. The year-on-year growth rate of both the downstream consumer goods industry and the upstream raw material industry increased significantly. From micro point of view, the growth rate of power generation, traditional industry has generally rebounded, which means that the economic recovery is expected to continue in the next 6 months or so. If you want to invest in China, a good combination of both bond and equity, even with some part of alternative investment, will basically create a good mixed assets. Overall and generally, we are optimistic about the investment arena. Of course, the opportunity will more skew towards emerging market, especially to countries like China. Of course, here everything with the assumption that the vaccines will come in place as per expectation, or even better, and then the international or global relationship among the major economic superpower house is in a stable stage.